Good morning. This is Ken Long from Tortoise Capital with a review of the weekend trading reports for April 30th, 2016. We have a market that is in bullish, quiet conditions. On an annual basis, using weekly RSI 14, we're in the middle of neutral at 57 out of 100. On a 10-day basis, using the 10-day NDX, we're just above oversold at 22 out of 100. In the market mosaic, price with respect to the 200-day moving average remains green bullish at 3.30. The slope of the 50 is still green bullish at 0.89. ADX is at 17.2 neutral with respect to trendiness, but the bulls slightly in charge. The risk index is the 30-period moving average of the VIX divided by the 10. 1.0 is the threshold between risk on and risk off. The current reading is at 1.009, so we're just slightly in risk on conditions right now. We take that score, look at the last 5,000 trading days, and compute the risk Z for the average and the standard deviation. And current reading of the risk Z is 0.02. Here you see a 90-day time series of that indicator. We've come down from 2.3 standard deviations above, made a swing low here, started to work back up, but then this week featured some more selling on weakness in the tech sector, and that has brought us very near to the zero line. And were it to fail below this line, then we're looking much more likely at a increase in volatility for a channeling between the prices of 210 and 180 in the S&P. So the worse that indicator gets, the more likely that that we're not going to get a breakout to the upside. So we'll be playing our cards close to the vest on this one with shortened time horizon and anticipating a volatility event that we can leverage intraday. We're going to rebalance the portfolio this week. These are the holdings for April. These are the current holdings for May based on ETF 13, 22, and 32 model portfolios. In the ETF 2, theoretical exposure is at 100%, and the model portfolio itself is still at 100%. Just a quick look at the components of the ETF blended monthly rebalancing portfolios. Latin America remains at the top, had a great week. Australia, Asia less Japan, emerging markets. Everything is on a buy signal. Same thing in the ETF 32. When we look at the ETF Max, there's some remarkable results here in the gold and precious metals, the mining, Brazil of all types, some just remarkable momentums. We've been taking advantage of XME and the gold miners in the chat room this past week on turbo trades, so we're going to continue to watch that one with great care. In the S&P 500, again, you're going to see the upper momentum, going up, dominated by energy and materials symbols, so that's still clearly the play to be made. Market health check. The vertical blue lines are 10, 20, and 30 days worth of look back. The horizontal red lines are the support levels that used to be resistance levels, and if we get more weakness, those are price targets on the way down. So our next significant support level down here around looks like 202. See the 10-period regression line, slope is still basically flat. The 30 is slightly sloped upwards. It's price is pulled back into the river, through the dragon and into the middle of the river at the Bollinger Band mean. Can see the slope of the 30 of the moving 30 regression line is this sine wave looking where it crosses this Dash line in the middle is where it goes from negative to positive. It peaked here near the end of March and has decayed back here. It's still above the zero line, but you can see that the slope is weakening compared to that previous 30 days, which was a rocket ship straight up. We've moved almost into oversold conditions here. The jaws of PPO have opened to the downside. And we've pulled back from this swing high around 211.5, 212. So I've got to see price close above this to really make the case that the next leg of the bull is here. This decay in the upward movement has now threatened a downward push as we're testing the bottom of the 30 period RAF regression channel as well as the Bollinger Band mean. So this is going to be a significant support level here, and let's see what we get this week. The ETF2 regional report, everything is on a buy signal. The strong strength in the U.S. at 21, greater than that in EFA at 19, so it's still the U.S. over the globals. Inside the U.S., it's mid caps at 24, and small caps 22, S&P at 21, and tech at 17. Inside the S&P spiders, strength in utilities, basic materials, industrials, and staples. Almost everything in the U.S. below average. Really, all the country indices are basically below average, with the exception of Latin America and Brazil, and that's because of the outsized performance in all of those metals and mining. ETF 2 lens tells the same story, being dominated by materials in Brazil. In the Dow 30, strength in Caterpillar and DuPont continues from last week. 4 in the red down here: Intel, Nike, Microsoft, and Apple. Shifting to the daily, we've got an index channeling long in Asia less Japan, an overreaction system long in SPY. Plenty of channeling and overreactions to choose from, and 5-day down patterns. Many on the auto framer, testing out better than 2 to 1 as you would expect after a couple days of pullback. In the Dow, again, many symbols testing out better than 2 to 1 on the auto framer. Lots of our favored patterns to choose from, along with many frogs. This is really an ideal time to be tightening up our intraday and turbo trading in addition to these swing trades. Lots to choose from in ATF2 as well, with a bunch of channelings and overreactions and 5-day downs, and half a dozen auto framers better than 2 to 1. Lots on the auto framer and the regression line fractal framework, and a couple on the daily squeeze. That's everything I want to cover for tonight. We've got some trade framing to do to be prepared for Monday. The folks in the chat room are dominating with the owl and the pocket patterns. This will be presentations that we make in the Kansas City Research Weekend and live trading workshops, so we invite you to come if you have a chance in June and spend some quality time with us working on these 2 newest additions to the RLCO framework. This is Ken Long from Tortoise Capital. Keep your risk measured and your powder dry.